Next, on the right-hand side of the screen is a table that presents the marketing period factors that were selected by the user, and a second table that provides the guideline stocks or indices provided by the user for purposes of calculating price volatility, and finally, the price volatility measurement period that was selected by the user. Now let's take a closer look at the stocks that were selected as guideline companies for Can-Build Construction Company. We see that the price volatility of stock 1038.HK is considerably less volatile than the others. And we note that the stock of Yojisung.BO is considerably more volatile than the others. Let's assume that we have investigated these anomalies and concluded that 1038.HK and Yojisung.BO are not as comparable to the subject company as we would like. We can return to step 3, remove these two stocks, and rerun the report. We do that by clicking the Run Again button and then scrolling down to step 3. The modified probability adjusted DLOM is now 14.2%. Now let's consider whether the look-back period makes a significant difference to DLOM. We do this by scrolling down to the Run Again button, clicking it, scrolling down to step 3, and selecting the 50 trading day radio button. We see that price volatility measured on a 50-day look-back is 12.7%. Comparing the 50-day and 500-day results tells us that the price volatility of the guideline companies has declined over the 2 years preceding the valuation date, except for AGX. Some event may have occurred that should be considered in deciding the appropriate price volatility look-back period, and some event may have occurred with AGX that has kept its price volatility high relative to competitors. Perhaps AGX should be removed from the guideline group, or perhaps AGX is the appropriate guideline. Selection of the appropriate one or more guidelines and the appropriate price volatility measurement period requires professional judgment. Now let's try something else. If your engagement allows the use of the Book of Wisdom concept, it might be appropriate to base price volatility on a time period after the valuation date. Let's click the Run Report button again. For this example, I will select the 6-month period from January 1 to June 30, 2011. Now we find that the probability adjusted DLOM is 11.7%, indicating that price volatility of the guideline group continued to be low during the 6 months after the valuation date. Appropriate application of the Book of Wisdom concept requires professional judgment. We also note that the price volatility of AGX has fallen in line with its competitors. Perhaps the 4 companies constitute a good guideline group after all. Now let's look at some other features of the screen report. The VFC DLOM calculator also provides a report in PDF format that can be printed or can be saved to the user's computer. The report includes all of the profile data provided by the user, including the valuation date and the report date, the probability adjusted DLOM, a summary of the calculation results, the inputs provided by the user, and a series of diagnostic graphs that we looked at before. The PDF report also includes the numbers comprising the results and graphs. Clicking the Download Tables button provides spreadsheets of these numbers. If you need assistance, Vianello Forensic Consulting, LLC is available for consultation, training, continuing education seminars, and expert testimony regarding the theories and methodologies underlying probability-based DLOM and application of the VFC DLOM calculator. Feel free to contact me directly and to visit VFC's website at www.vianello.biz. Please also consider visiting our affiliate website at www.judicialview.com. The Judicial View is a low-cost resource for court decision research.